Assalamu alaikum wa rahmatullahi wa barakatuh. Today we'll take the chapter 5. We'll discuss investment topic. Investment, first we'll take a brief about the type of investment. Actually divided to two types, either from the time, if we look to the investment from the period perspective, we could classify it to two types. As you can see at the bottom of the screen, there is two types according to the time of ownership. Either we could classify it as a short-term investment or long-term. Short-term investment, that means below 1 year, 5 months, 7 months, below 1 year, it could be classified as short-term. Long-term investment can be invested in more than 1 year. It could be either in stock or bonds actually. This, which is long term, more than 1 year when we purchase an investment. This is one classification of the investment through the period. We could also classify them from the ownership perspective, whether we own this type of investment or not. Then we classify as a debt equity, or a debt investment, or equity investment. Debt investment, there is only one type, which is bonds, that we will discuss it in this chapter, or also an equity investment are shares or stock, الأسهم أو السندات, shares or stock. In this we have many classification. Usually they classify them to 3 groups. Trading group, we could go to the next slide. There is a trading investment, which is contain both of them, bonds or shares, debt or equity securities. Trading, that means difference from the another type, which is available for sale, that prepare for immediate selling. The trading group for immediate. We purchase it today, tomorrow, after tomorrow, 1 week to 1 month. If the price is increasing, we will sell them directly. So we purchase them for trade only, because the price is today going down. We could purchase any bonds or shares to resell them when the price increased or raised again immediately. That's what we mean by trading. The another type, before available for sale, there's held to maturity. Held to maturity, you can see in the another column, there is only debt. Held to maturity, we keep it until the maturity date for bonds only. There is no maturity date for shares or stock. We have only maturity dates. There is expire date. When we take a loan, when we borrow from the bank, there is a maturity. There is a time we have to return that amount. The same thing here. We purchase it until the last day of the life of this bonds. That means the maturity date. Only for one type of securities, which is bonds. The third type is available for sale. Available for sale, which is between trading and held to maturity. That means we keep it until some time. It's not for immediate sale, and it's not to keep it up to the end of that maturity or for long time. Minimum between trading and held to maturity. This main 3 group of investment. Now, this is just a brief idea about how we deal with this investment, as well also trading. Investment could use a little bit the cost method. We have three types of methods. We'll discuss them later when we talk about the example and exercise. We have cost method, equity method, and consolidated method. We'll go directly to the first example to discuss how to journalize the investment in our books or records. On January 1st, exercise number 1. On January 1st, 2014, Al-Noor company decided to invest in tenor bonds. The bonds mature on December. Bonds, there is a maturity date at December 31st, 2018, after 4 years, and pay interest on June and December. They pay their interest twice, semi-annually, at 6% annually. 6% annually, we divided it to 2 times. The market rate of interest was also 6%. So as we discussed in the previous chapter, if the bonds rate and the market rate equal, both of them equal, then they will issue at face value. There will be no premium, no discount. So the 100,000 maturity value bonds for face value, because bonds rate and market rate are equal. They will issue at face value. Al-Noor intends to hold the bonds until the maturity, until the end of 2018. So journalize the transaction related to Al-Noor company. We have to prepare the journal entries related to this type of investment. The first journal entry, the issue entry, debt. When we issue the now we purchase, not issue. Previous chapter we issue the bonds. Now we purchase the bonds. We don't issue. We purchase them as investment. If we have a money, we have to invest it in somewhere. We go to these bonds to invest in that company. So now we talk about the investment. We could call it, since they are kept to maturity, we'll put in long term investment. And you could put the name of the company as well. Credit, cash. We purchase the bonds. We didn't issue anything. Now we talk about purchasing bonds. So we pay 100,000. Okay. This is the purchasing, the investing journal entry that had happened on 1st of January 2014. Okay. After 6 months, usually the company which we invest in, they pay interest each 6 months, twice, end of June, end of December. So 30 of June 2014, they will pay the first interest, then we will collect. They will pay to us the interest, so we'll collect it as a cash. From where it comes from? Revenue. We call interest revenue. Interest revenue. Why interest revenue? Because it comes from the investing in bonds. Dividend revenue, we'll see it later if we invest in the stock, in the equity. How much? We have 100,000. The bonds interest, not the market interest, the bonds interest is 6%, so we'll have 6,000. But 6,000 for 1 year. They paid twice, semi-annually, so time is 6 divided by 12. we have 3,000 each 6 months. Then the journal entry will be 3,000 dipped, 3,000 in the credit. Again, the same journal entry will be repeated at each period for the remaining life of the bonds. Here we talk about the end of year, 12th December 2014. Again, debt, cash, and credit, interest revenue. Bill, 3,000 debt side as well, 3,000 in the credit side. This is the requirement in exercise number 1. Exercise number 2, on September, company invested 10,000 in SC Incorporation stock. Here we talk about shares, equity, security. SC base, planting 800 dividend on December, planting sell the SC stock on November. Right. Okay. 9,700. Assume investment is categorized as trading. Journalize these entries. So here we have again 3 journal entry. You will do it by yourself. This is as a homework. I give you the answer for question 1. You will do by yourself question 2. Requirement or it's required 3 things from you. First, the investing journal, then the dividend entry. We have dividend, only the difference will be dividend revenue. Instead of interest revenue with bonds, we have to use dividend revenue. And they sell it. They sell the investment. So they receive a cash in the third journal entry. They receive a cash. They sell it. But they sell it for how much? For 9,700. They purchase it 10,000, resell it 9,000. So there will be a gain or loss. If they sell it more than 10,000 gain, if they sell it below the 10,000, that means there will be a loss. How much they sell, and we have to recognize the loss for this sale. Do it by yourself. 3 journal entries required by you: the purchasing, the revenue or dividend revenue, and the selling the investment. All right. Here in exercise 3, we have on January 1st, 2014, Registry Incorporation decide to invest 10,000 shares of Safari stock when the stock is selling for 15 per share. They purchase again some stock here. Safari declares 0.5 or 500 paisa per share cash dividend to stockholders of recorded on July to be paid on August. Right. On December 31st, 2000, Safari reported net income as well. End of 2014, they declare or report 80,000. Assume Safari has 25,000 shares of voting stock outstanding. So identify the group or the type of the investment. Okay, shall we? Okay. This exercise 3. January, yes, 2014. They purchase it. They purchase 10,000 of related 15 real per share. Right, they purchase 10,000 shares. They purchase 10,000 shares. I think I already prepared some calculation here. Not that one. Yeah, we'll do it by ourselves. Never shows it 10,000 shares. They paid 15 real per share. That means they paid 150,000 for the purchasing entry. That's time. When they declare, and we'll make it only one journal entry, declare 5 or 500 peso per share, 0.5 per share. We have 10,000 shares, so we will collect it cash. We talk about dividend revenue. Or before that, there is one more requirement. Identify what type of investment. What type of investment? Here there is, we have to find the percentage of ownership. Yes. No. For this one, we have to make, or to calculate the percentage, because we have to make two journal entry here for declaring and receiving that revenue. Percentage of ownership. They purchased 10,000 shares. They own 10,000 shares out of the total, which is 25. If you look at the last line in the question, assume Safari has 25 share of voting outstanding. They have 25,000 shares. If you want it as a percent, multiply by 100. It's 40%. 40%. They own 40% of this one. If they have 40%, it's not 50%. Now we have to talk about this percentage. You have three types of percentage. If it's below 20%, we call it, there is no significant influence, there is no control, and we have to use cost method. If it's above 20 and below 50, here we have to use the equity. What does it mean, equity method? We'll see it here. We have to make two journal entries. The first journal entry is when they declare the investment, or that they declare the revenue. We have to put it, or to add to the investment here, debt, a long term investment, credit, dividend revenue. Dividend revenue. When the company declared that amount, we have to, but here we don't have both. They declared 50%, yes, 50% for each share, and they pay, or declares 50% share cash dividend to the stockholders to record on July and paid on August. They paid it. And instead of two journal entries, we'll make it only one journal. No need to disturb you. We'll make only one journal entry: debt, cash, credit, dividend, dividend revenue. That's it. How much? We have 10,000 share, so they pay 0.50 for each share, so we'll have 5,000 as a dividend. 5,000 and 5,000. to analyze the transaction related to the investment object. That's it. There is nothing other than these two transactions, the issue and the cash collected as revenue, as dividend revenue. The percentage here show that this type of investment is available, or we call it, we have to use the cost method. What type? The first question, identify what type of investment is in the fourth group. If you look to the previous schedule, you will find it as significant influence investment. Significant. Why significant? Because we have 40%. It's not easy to ignore or to look at it as nothing. It's big percentage that will affect the decision maker inside the company until we reach 50%. That means we control it. At that time, we have to use another way to generalize the entries through the consolidated method. But we don't talk about the consolidated method here. You will study it in accounting for corporation, this method. Question 4 as well. Question 5, I wish also you can try it by yourself, and we will discuss it next week. After you send me the answer, we'll discuss it as well next week. Okay. So now you have 2, 4 and 5. Do your best with them, send the key answer, the answers, and I will reply, or I will make another video to give you the answer for this question, but after I see your attempt or your answer. Assalamu alaikum wa rahmatullahi wa barakatuh.